Alrighty, I'm super excited to be back today talking about something that's very important, Amber, to both you and I, and it should be to you. If you clicked on this video link, then it's probably important because we're talking about how to buy a house in 2022 and that process and things to be aware of and all the muckety-muck that COVID and 2020 and 2021 has created for new home buyers.
Yes, and I can tell 2022 is your year.
This is your year, baby.
It's time for you to buy a house.
We are not going to be too salesy. We're just going to get right into the nitty gritty here because I do think there's some really important things we need to talk about when it comes to buying a home. We could sit here and say, make sure you apply for a loan, make sure you click the link in the description, and we're going to do all of that. But some things that you need to really keep in mind when it comes to thinking about buying a home is employment. Let's talk about employment. You have to be employed. Okay, let's talk about that first of all. If you want to get a home loan, you're going to have some employment. But let's talk about that process.
Employment's been kind of a big thing because a lot of people were out of work for a while, right?
Yes.
So we have to look at employment on the lending side. So let's say you were, in the service industry, right? And you were off for quite some time, or even like in the convention industry, and you were off when COVID started, and you just went back like 2 months ago, right?
Or you relocated maybe, and you're renting in Las Vegas right now, and you didn't have a job when you moved here, and now you do, right? Yeah.
So if there's a 6-month job gap, so between your last job that you had and then this job, you went 6 months without work. If we're doing an FHA loan, now this is just FHA, this is not for every loan, but FHA, you have to be on a new job for 6 months before you can get a loan.
That's really good information.
That's just FHA.
Okay.
And honestly, we haven't dealt with that until we got caught with COVID, and
Right.
we're like, this is really a rule?
Right.
So that is a rule for FHA. If you could do conventional, then you don't need to really you can have a job gap. We can explain the job gap, and then you can move forward as long as you can qualify for the conventional. But we're going to look at, so when you're back to work, we're going to look at the hours. So we'll want to make sure if you're just moving here, you're just getting a new job back, you want to make sure if it's a full-time, you're actually putting in that 40 hours a week, because you're going to be weighed on that. They're going to look at your pay stubs, the verification of employment, make sure the year-to-date adds up to 40 hours a week. So just make sure that you're working that 40 hours a week and not calling out, not getting paid. Like if you call out sick and you have paid time off, fine. But if you're not getting paid while you're off, then your average is going to become lower.
I mean, and we've seen that happen even in pre-COVID with people who go on maternity leave and things like that, where you're gone for long extended periods of time. You can explain it. For most loans, you can just write a letter, you can explain it, no biggie. COVID's obviously an easy and very valid explanation, but we need to make sure that you're ready so that we have all of our ducks in a row before we move forward with a process of putting an offer on a home and moving into escrow, right? So employment's a really, really big thing. We know that it's been choppy for a lot of us, and we don't want that to kill your thoughts and your dreams about maybe buying a home in 2022 or beyond, because this is your year, right? We did say this is definitely your year.
I mean, that just sounds lucky. It's time to be a homeowner.
I bought a house in 2022.
It just sounds good.
Yes, so we're giving you the luck of the Irish here, the luck of the Las Vegas Irish, and letting you know this is your year. But let's be prepared when it comes to the employment conversation, right? If you're brand new at a job, doesn't mean you shouldn't call us. Let's have the conversation now. Click the link in the description so that we can start the conversation sooner rather than later. Let's pretend you're watching this video in March 2022, because I don't know, this is going to be alive the whole year, right? If you're watching this in March when you're like, I'll call them in December, I'm probably going to buy at the end of December. Wrong. Call us now. Now is the time to call, because even if you just started your job, you may be eligible to buy much sooner than you think, and you also don't want to sit and wait, because rates are going to be ticking up over the next couple of years as the economy starts to rebalance after the COVID crisis. Right?
And remember, because I just want to make sure I reiterate, when I say 6 months job gap, that's only if you were out of work for 6 months. If you weren't out of work and you just switched jobs, you're fine.
You're ready now,
there's no
baby.
gap. You just went from one job to the next. You're totally fine. Sometimes people think, I have to wait 2 years because they keep hearing 2 years on the job. It's not 2 years on the same job, 2 years in the same field. And sometimes if you're in customer service and you move to maybe a different industry in customer service, that's still customer service.
Yeah, I cannot tell you how many people still call and say, I'll be ready to buy in 2 years. I just started a new job. And I'm like, why are you waiting 2 years? Well, don't you have to wait 2 years to get a loan? No, you don't have to wait 2 years. I even grew up thinking that. So you absolutely do not have to wait 2 years. You could wait 2 weeks. You just have to have the proper documentation and the proper information. And who has that information for you, ladies and gentlemen? This lady right here. So now that we've talked about just the employment in general, let's talk about self-employed people like me.
It's a big subject.
Self-employed.
Yes.
It's definitely a different process for a self-employed person. And again, don't want you to assume that you are not eligible because you are self-employed. You are. Let's talk about it.
So self-employed, it depends on the type of loan. So FHA or VA loans, you're going to provide your 2 years tax returns, And then we're gonna look at your adjusted gross income. There's some things that we can add back in. So we'll do a worksheet to figure out how much income that we can use. For FHA and VA. Conventional, we do the same thing, but there are some additions to conventional that have made it a little bit more difficult for self-employed. Not difficult, but they just do look at a lot more. They just look at more things.
Asking more questions
yes.
is definitely the way
yes,
it is.
Yes, because with COVID, what happened is a lot of people had a hard time with business, so they just want to make sure that your business is good to where you're going to be able to make that payment, right?
Yeah, I mean, that's the entire thing. I think a lot of people I even am going to be honest, get freaked out when there's questions being asked about what year did you pay this tax and how much expenses do you have in that, and it just gets really invasive. It feels very invasive, and it makes me feel like, did I mess something up? Am I doing something wrong? No, but you have to understand, this is a bank who's looking at lending you a large sum of money to buy the largest purchase in your life, and they want to make sure that you're going to be able to make good on that promise to make those payments. So it's definitely understandable. So don't come in with your arms up, ready to fight. Come in with them down.
Remember, we're on
here
your
protecting
side.
you.
Yeah, we're on your side.
Yeah.
So what they're going to ask for on the conventional side is the 2 years tax returns. You're going to want to provide a year-to-date profit and loss, which honestly you have to provide that for VA and FHA too. Here's the difference on conventional. The profit and loss they're going to be looking at to make sure that your bank statements, so the last 3 bank statements, somewhat match your profit and loss. And what they're also going to look to see is that on your bank statements for your business that you're not showing more withdrawals than deposits.
Got it.
So you're going to want to make sure that your deposits are always more than your withdrawals. Now, sometimes self-employed, you make more one month and then less the next month, and by the end of the year, everything balances out. Yeah, right. That's how most people work. So some of that is not common sense. So when it's not common sense, then I'll go back to the underwriter and say, okay, here's how the business works. They, like say for example, a real estate agent, right? You make so much commissions one month, and the next month you're showing a lot of houses, and the next month you make commissions. It just depends on how that ebb and flows.
Right.
So if we're on an ebb and flow business, then sometimes I'll want to show more bank statements and then paint your picture a little bit better.
Right.
To be able to say, okay, here's where the money comes in, and here's how the business flows.
Right.
So there's just a little bit more explanation with your bank statements. So they're going a little bit deeper now, looking into your bank statements to make sure that your profit and loss lines up with what your bank statements show.
Thanks a lot, COVID. Just kidding. But seriously,
I've been waiting for it to go away, and it's not going away. So I don't know if it's the new norm.
We're just here to help educate you, right?
Yeah.
We want to make sure in 2022, when you're buying that house, because this is your lucky year, this is the time that you need to come in ready, fully awake, knowing what to expect. What, if anything, has COVID affected it in terms of the house buying process? I know that rates and things like that are always being adjusted based on the fact that the artificial stimulants to the economy lowered the rates to a level that we've never seen. But we're not expecting rates to be crazy. That'll always be a moment-to-moment conversation. That's not something we're going to quote today because we don't know. But aside from rates, aside from employment requirements, aside from the self-employment structured process of buying a house, what else can people be aware of?
Well, one good thing that's recently happened is the loan limit for conventional loans. Have we talked about that yet?
No, we haven't.
We haven't talked about that yet. So because the housing's kind of gotten a little bit
more expensive. Houses have gotten more expensive.
And this is nationwide, right? So every county has different limits. Do you want to even guess what Clark County's gone up to?
No.
So, but let me just talk about 2020. We were so excited in January when we did our thing.
I remember.
It was 548 that we were able to go up to. So
you
that
can
was
borrow
a big,
up to 548,000.
Yeah, and so this is conventional loan limit. So conventional means that there's a looser guidelines if you say underneath the conventional loan limit. You can go down to 3% down with certain requirements, or 5% down. You have a lot of different requirements that you can look at that are looser than jumbo. Jumbo gets more strict. So now it's up to 625.
In 2 years.
So 19 it was like 510 and change. Then in 2020 it was 548 and
38,
change.
yeah.
And then now 625. That's a big jump.
And that really is due to COVID, right?
Yeah.
Due to the COVID, not even just due to COVID. We were already on the way there with Las Vegas's fast-paced growth, right? We were already on the way there with a little bit of a lower inventory than we would like to have. It was already a seller's market, and then COVID hit, and then everything kind of went haywire. But all of the things that we would have normally seen happen anyway were just simply sped up, I believe, because we did see such rapid growth in 2021.
Because of the lower rates.
Yeah. Lower rates gave more opportunity for people to buy. More people came out to buy, which then gave us less inventory, less building. It's a trickle effect, right? Domino effect. So for us, what's exciting is is that, you know, it gives you a chance to keep up with the rates and keep up with the prices of the homes and not be cut out and shut out because you might not be able to qualify based on those loan limits. So it's really exciting that you're actually able to borrow a little bit more and not stress too much about going over that limit and having to pay a higher rate and things like that. So
yeah, gives you more flexibility.
I love that.
Yep.
Anything else that we're not missing that we're missing today? That
Okay, so we
COVID's
covered
affected? Employment.
We covered employment.
Self-employment.
Self-employed's a big one.
Rates are going to be ticking up, and then the loan limits.
The loan limits. I can't think of anything
I think
else.
that's it.
I think we covered it.
I think that's it, and I think that's about all you need to know when it comes to buying a house in 2022. Really, those are the main factors that you need to be paying attention to. Yes, do you still need to save for a down payment? Of course, but there are also some really awesome free money programs and grants that are still available. What's exciting about the fact that they're still available is that you can match and pair free money programs and things like that with those loans to help you with down payment, with closing costs, etc. We've done a video separate about those free money programs, so stay tuned to the channel for that. We'll make sure that we link it here if it's already been released. But other than that, really just save your money, make sure you're focused on your credit, but before you do any of all of that, just call us. We'll help you put a program together. Amber will help you talk about what your situation. I promise you, it's happened almost every single time. A client calls me and says, I don't think I'm ready yet. I put them in touch with Amber, and Amber says, oh boy, you're ready.
Just remember, everybody's situation's so different.
Yeah.
So yours is going to be different. So it's a matter of looking at yours individually and then figuring out a game plan that's specific to you to buy your house.
So what do they need to do next, Amber? They need to click the link below. Make sure you click that link in the description. We really want to talk to you, even if you're not thinking about moving for 5 to 10 years, even if you don't think you're going to ever buy and you're just renting, just give us a call. We love working with people who aren't sure to help you really understand so that you are sure about whatever that next step is going to be for your home buying or your really investment process.
Yes, for sure.
We really appreciate you always tuning into our stuff. I love you, my friend, for always being a part of this.
And thanks for inviting me.
Thank you, and thank you as always. We'll see you next time.
Bye.